Yep. Hopefully you guys doing well. Today we're looking at NASDAQ as per usual. I sent out the daily bias. I was looking for shorts coming to the session, but I do realize the higher time frame order flow and such is bullish. So I'm staying flexible today. As of right now, on the 1 hour chart, the 15-minute chart, the 4 hour chart, the daily chart, all pointing to upside price action. I got this inefficiency in here, plus the bullish order block on multiple time frames that price energetically dropped into, and that energy is the thing that may psych some people out into why we're looking for longs today. But I'm not gonna let that fool me. So sure, that energetic drop down with SMT at the daily highs, and obviously displacement through multiple different PD arrays and such makes me believe that at least for the short term, we'd like to see bearish price action. But and we have all this original consolidation right now at the current weekly low. But what I'm seeing right now is, at least on the 1 hour chart and 15-minute chart, is that we're creating this BPR. Like this is just going to be a higher time frame wicking down into that gap, into the 4 hour gap, 4 hour order block. And then we're going to go all the way back up for the current weekly high. So I'm watching how we're reacting to the first presentation gap and all the PD rays on this right side of the curve. We have this large imbalance, obviously, on this side that we're trading into. So I mentioned inside that daily bias chat as well that if we were to trade back into the 830 gap, it would need to create a strong balanced price range and then attempt to move past the current daily high. This would be a high resistance move in the beginning. Not really having, it's a little bit high resistance right now, just seeing shoot straight up. But it should start to smooth out after we get preferably above that buy side there. So, as I mentioned yesterday in the daily review that we had, I've already got my trade in for the week. So I'm not looking to rush today. I'm not looking to just force something that's not there, even if it's subpar. I'm completely fine with just tape reading today and not really taking anything. And it'll not going to go until 11 o'clock today, so may wrap it up around 10:20, 10:30. Still trying to take it easy on my brain. And then, yeah, if you got any questions and such, we can get those answered as well. Also, if you have any DMs that I didn't answer, I will be answering all of those today if I didn't get to you yesterday. All right, so right now we got a 2-minute fair value gap. Yeah, 2-minute gap trading into 3-minute gap as well. It's just kind of slow grinding up. And you know, my protocol for 8:30 news days is I like to trade between the times of 9:30 and 10:10, preferably 9:20 and 10:10, that early opening range, because of the fact that we have volatility coming into the market here. The movement's already started happening. I want to get a trade, preferably in the opening range or slightly past it, just because I want to be in the move before the rest of the move finishes, right? You can trade Silver Bullet, you can trade the 10 to 50 macro, but as we push it further and further away from 8:30, number one, the volatility decreases. Number two, the opportunity decreases, meaning the entry to exit range normally is smaller. And also number three, the probabilities also decrease. So if you were to trade Silver Bullet, there's nothing wrong with that, but understand that your ranges are going to be smaller. The likelihood of you being in a more choppy type of profile is higher. So when the opportunity is being presented to me within the opening range and quickly after 9:30 or at 9:30, that's the kind of move that I like to trade. And we do have SMT at this current daily low with YM right now. I would have loved if 9:30 came down and swept out this swing low and then it started to climb back. You're seeing that on YM there. Yes, not really anywhere near their CE of that gap. But if you look at the hourly chart, you know, this strong down up move, 15-minute chart as well, starting to form that BPR. So if we were to close this candle or the next candle healthy above that, I'm not thinking just this buy side, I'm thinking the current weekly high and probably past it with how strong that's kind of showing. You can see the accumulation in here, manipulation, and then potentially distribution back to the ERL. Right, because this would be the gap, and then this would be the ERL that's resting before the gap retracement. So you wouldn't just be shooting for that bias, I'd be shooting for the ERL from current weekly. But we're holding PDRA so far. If you want to mark out this gap, you can extend it through and just see how we're closing past each of the quadrants. But all you really need is this right side of the curve. So I'm at this point, if I want to enter in long, I'm looking for some sort of retracement to start. I don't like trading these expansion legs. Partially for psychological reasons and partially just for entry reasons. I mean, it's not really psychological, just the psychological part of where do I place my stop. You know, I don't like getting in positions where I have a 2-to-1 expectancy. That's not really the way that I trade. The way that I trade is I look for preferably larger trades like 3R plus, 4R, 5R, kind of is my average trade that if I'm going to take a trade, that's normally what it's resting around. And a lot of that is thanks to the stop loss placement more than it is of the actual targeting. But I don't want to have a 100-point stop loss and a 200-point take profit. You know, so expansions are harder to trade in that sense because of if you want to get on an order block, you know, and you're mistiming it, you have the chance of either getting stopped out because it wants to come back and retrace, or the conviction on that stop loss placement of being a true point of invalidation has left. You know what I'm saying? Like if you get it on an order block, right? You're taking this trade right here. If that's not your model. So you're just, okay, I'm going to take an expansion entry, boom, right off this order block. You may not trust this as a point of invalidation, or you may not trust the order block as a point of invalidation. Meaning when you do get stopped out, you're going to be wanting to or looking for more entries than you probably need to overtrade or over leverage, things like that. So for me, if I want to get in a trade in this case, I need it to give me some sort of retracement. You know, we're digging into that 2-minute gap here. I do see that 3-minute gap, but not really my style. So I want to see something like nice retracement. Then I either can take this entry here or take the SISD entry here, and I know where to place my stop in both of those, right? Tighter stop, I trust that to be a point of invalidation as long as order flow is moving in that direction. So then if I do get stopped out, perfectly fine with that outcome, right? A lot of discipline in trading and a lot of the emotional side of it is being okay with the numbers, right? If you don't know your model, if you don't know your expectancy per trade, if you don't know your win rate, if you don't know what days you're supposed to be trading, what days you're not supposed to be trading, you know, if you're not okay with the loss amount, those numbers, if you either don't know them or if you're not okay with them subconsciously, it makes it much harder to trade properly, right? If you were to see negative 30,000 as your average loss and you can't actually accept that, it's much harder to deal with that outcome, and you're going to have emotions obviously rising because of that. You want to get it to just a very mundane, doesn't matter type of thing. And normally that comes from dropping risk, dropping the amount of trades, things like that are working in your favor in the beginning. And then you'll see that trading is very exponential. So we're still kind of holding these PDRs here, so I'm going to keep yapping, but obviously you can be watching them. But trading is exponential, meaning as you start off, not just start your career, but say you start off in a funded or whatever, it goes very slow in the beginning. Okay. And the more you try and rush these payouts, the more you try and rush the evaluations, the longer it takes because you end up failing them and then you got to restart. But if you just accept that in the beginning of whatever account it is, you're going to start very slow. It's going to be kind of this slow movement up and down. It seems like you're just sitting at break even. But then once you get this breakout week or breakout month and you start pushing those profits, eventually the power of compounding takes in effect. And now you're risk is higher, your take profits are further, right? You're scaling up as you go up and you're scaling down as you go down. And as long as you have a positive expectancy, meaning your win rate and your RR are saying that you're profitable in theory, you're going to eventually get to a point where your risk is double your starting account, you know, and then your average trade is probably 4 times what your starting account balance was. And then you just see this exponential growth. So that's why taking less trades in the beginning seems kind of scary, because you're like, how am I going to pass this account? But you're not thinking that in the future, when you do have the account size that's higher, that's exactly what you're going to be doing, is taking trades once a week, maybe twice a week, 3 times a week, just trying to get those high quality entries. Because if you're able to get a really high quality trade, that has the possibility of paying your entire monthly salary or monthly goal. But you're not going to see it right from the jump, right? Because the numbers are going to be less than what you expect. But you got to think like the end at the beginning, and then it starts to clarify itself. So on the 4-hour chart, you have this beautiful wick dropping back into the gap and the order block there. Gap, order block. So we can start to shoot for this daily buy side. Let me put that in predictions chat. Bullish up to current weekly high. And now I can look for entries. Then we do have the macro time here. So this short-term buy side is just a minor buy side pool, meaning I do not expect this to be the draw, right? It is a pool of buy side there that we're going to have a partial opportunity being presented on that swing high. But when we look at the 4-hour chart, where is our external range of liquidity, right? We're framing this on a weekly and daily move. So if it's forming this daily low and this weekly retracement inside of a 4-hour gap, got to look for a 4-hour swing high. So you have one there, that works. And then you have this one, right? And this is that overarching ERL that we'd be looking for to serve as our exit liquidity. So as it's trading up here, I'm looking for inefficiencies and retracements to occur. You don't really have a super clean last manipulation leg. I mean, technically you could even use this entire thing, right? And shoot all the way up to there. But you have this AM session high and then the ERL from right there. And then technically this would be a SIST as you trade through there. But got a bunch of gaps in here on the 950 macro being presented. And do not think that it is leaving without us, all right? Okay, this range is nice, 200, 100 point range. If you didn't get an entry, it's not a big deal. Do you see me freaking out? I'm not. My tone of voice has been the same since I started this. The market is always offering endless opportunities. And if you know how to get in and when to get in and where to get in, the opportunity down here can very well give the same exact RR as someone who potentially is getting up here, as long as you know what you're looking for. So you don't need the entire range to be profitable, right? You don't need to get in down here. You don't need to say, oh, this is missed entry, missed entry, missed entry. I'm waiting for my criteria, just like how you should be waiting for your criteria. So in this case, we have a swing low to swing high. And now we're dropping into an inefficiency that should be there on the multiple time frames. You have 3 minute there and on the 1 minute here. I marked out the order block as well. Tagged into discount. So I want to be cheeky. I could go to 15-second chart, look for kind of a market maker buy model in here. And then once it starts to give me buy model confluences, I could take that. You can see on this 5-minute chart how strong it's been relative to this move down. So that's something you should be able to spot visually to say, okay, why is it not coming back and filling these gaps, right? Why is it leaving this open? It's exactly what I was looking for on that daily bias, right? If we were to trade back up, what did I say? If we were to trade back up, we need to create a strong balanced price range and then attempt to move past the current daily high. So this right here, this wick is what it looks like on a 4-hour chart. On a 1-hour chart, you have this black candle, green candle. 15-minute chart, what do you have? Gap. And then you should have, preferably, a gap that's forming on the buy side, the bisi, forming within this sell side imbalance. So a balanced price range. When you see that, you can say, okay, that's a pretty strong algorithmic signature, likely to move higher past that. you still want to be monitoring the other assets here. So see, YM is having a very hard time moving any bit higher. ES also just trading back up into 50% of that gap. So we still got to be monitoring what's going on across these ones, because if you look at the 1 hour chart here, this looks more like an immediate rebalance coming back up to the order block. And depending on how this candle closes, which it's probably just going to close around where it is right now, that can also be telling you something, right? And you have inefficiencies and such down here that we've not tagged into. That's a pretty true inefficiency, meaning, oh yeah, this is from July. So yeah, this is an imbalance. This is, you look at this as a buy side imbalance, sell side inefficiency. Let's go back to the 1 minute chart here. So none of this right here is popping out at me, for me personally, as take this, take this, take this, take me. You know, it's moving for sure, but nothing in this is high conviction to me. Right? I want to see very specific elements play in. So we came back, trading back into the 2 minute gap there. Two-minute inefficiency. Into deep discount. And clean some of this up a little bit. Now, you could, someone who's very, you could see this as SIST. Now, because of the fact that there's inefficiencies on the 1 minute chart, it just gapped down in here, and we're using this and we traded through it. Someone who's looking at this as an entry, I would wait to see if we can get a SIST above here, or if we can get kind of secondary displacement, right? So I wouldn't be personally taking this SIST. This is kind of my own trading style, is taking these. You've seen me take this before. I would wait for a second one because I want to make sure that we're starting to leave this gap that we have right here. That's more advanced stuff, so don't worry about it if that's not your trading model. Remember what I said about this buy side too. This is a minor buy side pool, meaning this is obviously BPI. This is an energetic run. So, I mean, also think about how many stops are going to be up here. Sure, there's probably a little bit of swing traders who want to put their stops there, but anyone intraday is not really going to have their stop here. They either got stopped out on this move higher and then it energetically ran down. But I didn't see this release. I don't know how quick it was, but PPI is pretty fast normally. So this is still a minor buy side pull from a liquidity standpoint of how much liquidity is actually resting there. Probably not too many orders. So this is what I'm going to be watching, is this market maker buy model here. Screenshot this, actually put in prediction chat. Watching 15-second NBM. I want to watch how this OB holds. I would love to see is a gap form on top of this swing high. So if you can gap there, trace back into the gap. Here comes your gap. If I can come down and touch the order block. Straight into the wick there. So that's a nice reaction. You're starting to see these bullish PD rays holding, right? Drops into this, holds the gap, displaces up a little bit. Reclaimed bisi being used there, displacement up. Order block inefficiency using that, displacing up. So at least on the 1 minute chart, we're starting to hold bullish PD rays. Sorry, 15-second chart, we're starting to hold these bullish PD rays. After we had a 1 minute retracement back into the gap, back into discount. Why does TradingView sometimes do this? Is leave this never really understood why it just will form random price gaps there. Now this here is a balanced price range that you would have to get through pretty quickly if it wants to move higher. So this is a reclaimed bisi. So this is a balanced price range for the most part. So you don't expect a lot of resistance through if it wants to trade through that. And obviously buy side up there, and then buy side at the ERL would be the AM session high from yesterday, and then the external range there. Just realized since I can only enter with 2 cons, if I need to use M and Q, I just enter multiple times. What do you mean? Oh, yeah, I see. So it's not really giving me the, I needed to trade through this quickly. Like we had the retap on 15-second chart. We already had this fair value gap and order block trade into here, and then it energetically took out that high. Didn't form a gap on it, but it's stalling a little bit too much for my liking. And you see it energetically come back up. So a balanced price range is when you have those gaps forming through, so right, gaps up, gaps back down, right through that same kind of area in the y-axis. And you can look at that as a balanced price range, meaning it's pretty, now there's 2 definitions. You have this gap like this, or an area in price where you have both buying and selling equally through a different range. That's kind of the true definition of a balanced price range. So the way that I'm using it is, okay, if we have formed a balanced price range and I'm looking for a price to trade through that, then there shouldn't be a lot of resistance because, okay, if there's been equaling buying pressure and equal selling pressure, quote unquote, through that range, there's not a lot of skipping of orders. It's kind of the way that I look at it. So it's not going to have to be as high resistance. You know, it's going to be kind of smoother. It's like if we trade through kind of a really clean wick. Now, a reclaimed bisi would be something that, in this case, it trades through to reach back into discount, whatever that discount target is, and then it trades back through it. And as it's retapping this, it's almost an IFEG, but not really, because an IFEG is being used as kind of the other side of the curve. In this case, we're using inefficiency still on the right side of the curve here towards the buy side target. So it's not really an IFEG. An IFEG is when you have like this and you have a gap over here on the left side of the curve, then you're going to be using it again on that side. But same kind of function, I guess, because it's traded through and then reclaimed. So I'm watching this 1 minute chart pretty intently here, but we have an order block. I don't really want it to come back into this gap at all, nor do I want it to approach that swing low. So this is kind of my last line in the sand for this current tape reading, kind of where I am right now, is I'm assuming it's going to hold this gap, hold this order block, and then expand up again, and then take out that swing high and then go to the buy side. If it does not want to do that, I'll just readjust. That's what I'm looking for right now. Where is my 930 high? Why is this giving me oh, I'm gonna say I don't know why that was. Must have been from yesterday. The projection or something. Yeah, so right here is kind of where I'm focusing. It shouldn't need to, at least in my mind, come back down and take out that order block low, or come back down and take out that swing low. So I wanted to hold this PD array in here. You can see it's consolidating for quite some time. So once we displace through this swing high, I'd like for that to confirm the market maker buy model's in place. It's just stalling out here a little bit too much for my liking. Keeps coming back down, touching the order block, filling the gap, coming back down, come back down, come back down. It's not giving me the speed that it was having originally. So it's ran out the stops on all those swing lows there. If it does not speed away at this point, then I'll probably just manually close something out. But we're just waiting at this point. Now the minor buy side can be used as a target. 15-minute chart. You do have this gap right here. It's pretty close as well. Right, so that'd be another IRL. You can use the hourly chart or the 15-minute chart. In this case, the 1 hour chart is quite large, so you either could narrow it down to a 15-minute chart liquidity pool or 15-minute 1 hour order block. In this case, you have this OB and this. You can see this down closing candle, up closing candle, down closing candle. This in here is the last efficient area of price action, so you can use it as a target. But 15-minute chart, you just have that IRL. So in this case, it's just not giving me what I want. Retrading multiple times into this OB, coming back down a bit further than I would like. So we got to reassess. What does it want to do? We'll leave this on. It may just stall out here. I would not really like to see that, but and the reason I don't really want it to stall is because of what the theory was on the 1 hour chart here and the 15-minute chart. I want this to be a strong BPR. So for it to come back down and close back down here, it's not really showing its willingness to print up, and get out of this range. Wants to stall out in here and trade within this range and consolidate. I want nothing to do with it. It's kind of like trying to short it back inside an internal gap. No, I still think the bias is correct. So I'm still looking for higher prices, but the 1 minute chart, the 15-second chart, all are entering into this period of consolidation. Right, like obviously this is not the price action we were seeing prior to it. I mean, we have some in here, but at the same time, it's still holding the PD raise and continuously making higher lows and higher highs. And I don't really see this as a shorting opportunity either, right at 10 o'clock here. Yeah, this is slow grinding up. YM, slow grinding up. So Nasdaq's the only one stalling out. Need DXY to come back down. So if it comes back to first presentation at this point, I would not be interested anymore. I really wanted to stay above these intermediate term lows. But it looks like he just wants to chop around here. This is what August PA looks like. So when people say this is the kind of price action that you want to avoid and you're not going to have precision, this is kind of what we're talking about. The higher time frame is still going to move, and it's in terms of daily structure is still going to move, but the timings are going to be weird. It's going to fail to hit TPs. It's going to enter into these consolidation periods after it just looks very clean. So you have to be very, very smart with how you manage yourself. If you're trying to overtrade in these conditions, you're going to get chopped up. You have to accept risk. You have to accept the outcomes. So as soon as you put on that trade, you're accepting whatever the outcome is. If you do not do that, if you're expecting to win, if you're expecting it to be really clean, you're going to get very disappointed and your expectations are not going to be met. So, what can you do? So I'm in this case, I'm in this kind of conditions. I mentioned it yesterday. I'm taking more continuation trades, meaning I want to see 1, 2, 3, 4, 5, and then take the 6 instead of taking the 1, 2, and then taking the 3. So I want to see multiple confirmations of price and take this one rather than waiting for and trying to snipe at the bottom, which we can do more in the spring and the fall. So I have wider stops, not super wide, but it may be another swing low or swing high from where I usually have it. And I'm taking partials more aggressively in these scenarios, It's hard because you don't have, like I said, you don't have a clean last manipulation leg. So if you can find a -1, -1.5 and trade that, that'd be much, much nicer. But you can see now we're past that sweet spot I was talking about of 9:30 to 10 o'clock to find an entry. We're entering a consolidation. We have silver bullet. You very well may find an entry into here and take something like that. But, that's what I was talking about. Your ranges are going to be smaller. It's going to be low probability conditions. Like in this case, I don't really have a reason as to why it'd be retracing right now. You know, like in my mind, I don't know why it'd be retracing back into discount. We just offered discount here, traded into a reclaimed inefficiency, traded up, gap through that. You know, now it's just slow grinding back down to what, fill a wick. We didn't really miss anything in here. I mean, we missed the first presentation gap, but after we failed to touch it here, failed to touch it here, I see that as a breakaway gap. And now what? Slow grinding back into discount after reach premium here, and it's going to re-offer an entry later. It's not much you can do about that. You know, you're not going to be perfect. You're going to get stopped out sometimes. Everyone loses. The greatest trader you know loses. So managing losses and managing expectations are part of the game. And as soon as you can realize that and come to terms with that and get comfortable with losing, like it's not a big deal because you know that the next day, as long as you cut your risk, you'll be fine. That is the most important thing. Yeah, I mean, you know, you could say that. Yes, I mean, my mind, yes, is already kind of clean. Cleaner than it was in opening range. You know, in this case, sure, now you have a gap here that's yes is trading into, sure. So that means the NASDAQ also should sort of be leaving their consolidation range. But I'm already uninterested in this. Not nowhere as clean as it was yesterday, obviously. But let's see. I'll take a demo trade here. I already lost on my real accounts, so I'm done for the day on there. I basically just took the fair value gap entry here, stop at the order block low, got stopped out over here, 1009. But now you can start to see this being used as the reclaimed gap like we wanted to. I'll take a demo trade. I'm done for the day on my live, so I'm not taking the second trade over there. If it wants to give me fill here, then I'll take this one. Just for the demo learning. But remember what I mentioned about this balance price range, right? We want it to energetically quickly go through there. And once it displaces through this swing high, we confirm that as a market maker buy model. So in this case, I guess, mistimed it, or my stop was too tight, one of the two. But to be honest, I feel like I'm pretty comfortable with that stop loss placement. Do I really want to put it down here after getting an entry up here? Not really. Nor do I see a reason for it to, in hindsight or in real time, for it to come back down and trade back into the wick of this and then come back up, shoot back up. So just kind of unlucky situation. All right, what can you do? This you could see more as an IFEG, right? Balance price range IFEG, however you mark it out, either way. It's not even going to film me, is it? Finally. I was just taking a scalp here just for my own fun. I'm not going to put this in stream trades. I will put the actual trade I took, though, in stream trades. It's off stream, but I think it's good to learn from and be transparent. Let me go and screenshot that really quickly. So here is the execution. Put this in stream trades if you want it. I didn't post the one from yesterday in stream trades. I was taken off stream, but we'll count this as a stream trade. So you can see in there if you want to go over and look at it. Entry on the fair value gap there at around 10 o'clock on 15-second chart, and then stop loss as well on that order block I mentioned. So, and this was, in this case, this was a full entry, meaning I did not leave myself room to pyramid. So I full risked the entry based on where my stop was, and then full pull the exit for the day. So there's the entry if you want to study that. And this one, I'm just taking this for my own fun. So entry was just on, I was trying to get filled on the fair value gap, but as soon as it took out this swing high, sorry, the SISD there, I'm taking the entry there. Stop loss right now is underneath the 1 minute breakaway gap. We have balanced price range, we have the order block here, and we have this inefficiency here that all should be holding the price action. And there we go. I'm done for the day. So I'll study it later, but just unfortunate situations. I mean, it may not even leave and actually go to the target at all. But this is why you need to have risk management, okay? So yesterday was my entire weekly target met. Today pushes it back just a little bit, but still it's the entire weekly target. So I'm not risking all the profits, of course. Being smart, waiting for everything to kind of line up for me. Doesn't work out. Perfectly fine. You can see in here, it's just retracing all the way back down. It's probably going to go all the way back up. So just a lesson in staying solvent, staying patient. You know, we got 8:30 news tomorrow, of course. So there's going to be setups there if you want to take that. I may call it a week unless tomorrow's fantastic. But as long as we reach the all-time highs between sometime today and tomorrow at 9:30, then I probably won't be trading unless it's a clear continuation setup. It doesn't really matter. But I'll let you guys know. I'm going to just head off here. I'll post the recording, of course, up on YouTube unlisted. So once that's finished, I will ping you guys. If you got any questions, you can shoot me a DM. I'll be answering all of those today. All right. So I know we didn't win, but hopefully it's still insightful as usual. And be smart, be safe, journal if you have not already. And I will hopefully see you guys tomorrow for another stream. All right. So take care and peace.